Welcome to the Agent of Wealth podcast with Marc Bautis from Bautis Financial. In this podcast, Marc helps guide you towards financial freedom, ensure you never run out of money, and create a balance in life that prioritizes what is most important to you. Join us for this journey as Marc draws from years of expertise and guest experts to solve the multiple wealth building challenges involved in your financial life.
Welcome back to the Agent of Wealth. This is your host, Mark Bautis. On today's show, I brought on a special guest, Mark Basa. Mark is the global brand and business manager for Hokk Finance. An early crypto evangelist, Mark's decade of experience and expertise establishes him as a thought leader in creating and building crypto brands. Mark, welcome to the show.
Thank you so much, Mark. It's great to be here.
So I'm excited about today's episode. We get to talk about crypto and digital assets. And there's a ton of interest in it. Even I'm seeing it on my side. But I'm not sure how well this space is understood. Maybe can you start off by just giving us an overview of digital assets, decentralized finance, and what it actually is?
Yeah, for sure. The best way to understand this whole thing about decentralized finance is if you think about centralized banking, fiat currency, government-backed currency systems that are basically controlled by governments, and basically what the entire financial banking system is built on. Like there are third parties, there are middlemen. Decentralized finance basically replicates, you could say, how you can send and spend, invest, do anything you want with the currency. But the difference is that there's no real third party. There's no middleman or person that's stopping you from spending or sending you the money the way that you want to. So on a greater scale, decentralized finance really means that you own your money. So for example, if I was to take fiat currency, US dollars, and I was to convert that to Ethereum or Bitcoin, for example, that runs on a network. So you imagine a computer network, and there are thousands of different computers all over the world that support that network. So if I want to send you, Mark, some money, for example, if I buy a car from you, that goes directly to you. It doesn't have to go through to a bank and then to another bank and then to you, like many of the world's banking systems do. So as a greater whole, decentralized finance should be thought about is that you own your currency, first off. In terms of digital assets, so the next layer of decentralized finance, and you would have heard this buzzword, NFTs, right? Non-fungible tokens. It's kind of like all the craze now. The best way to think about that is that you have a JPEG or a PNG file on your computer of your family. That can be copied and pasted, and that can be shared. And there's many, many copies. The only original one ever is probably the one that you took on film or on Polaroid, for example. Now, if you take this further from a digital asset, think about a piece of code, like a string of numbers and letters, and it's unique on the blockchain. It can never be changed. It can never be edited or altered. So when you attach something to that, it becomes a non-fungible token. It becomes basically the only one that's ever going to exist of that type. So that means if you're a creator or you've got some sort of contract, you can store that on the blockchain, use that, share that, but it's the only one to ever exist. So the big thing with NFTs right now, there's this collection called the Bored Ape Yacht Club, and it got really, really famous. And celebrities are paying like hundreds of thousands of dollars to millions of dollars for these cartoon images of monkeys that look bored, and they're stored on the blockchain. They're NFTs and they're tradable. So that itself now is really interesting because now people aren't trading JPEGs or PNGs, which have no sole intrinsic value, you could say. They can be copied and pasted, but these bored apes will only ever be one of the kind, the ones that are traded and collected. So that's sort of the greater top level layer of decentralized finance and digital assets. And then further, what you can do from that is anyone's game. You can really do so many things.
Yeah, it's definitely interesting. So even if we take a step back to, you gave the example of, buying a car from me and sending them the money. Is that record kept on a ledger in some kind of, or is it totally anonymous? And, I guess, how does an actual transaction work?
The most standard way to think about it is these decentralized wallets. So like I have a plugin on my Google Chrome browser, okay, MetaMask, and you have a MetaMask as well. And there's different addresses. So these addresses are, as I said, numbers and characters, and they're very unique. There's no other ones like that. So if I want to send you, let's say it's $1,000 for this car, that $1,000 then goes through the network. I pay a fee to the network to produce that transaction, if you will, and you receive the money. There's a transaction record there that can be found. It can be traced. However, where it gets interesting in terms of privacy and control is who owns those wallets. Do you own those wallets? Do I own it? That's one of the things that decentralization brings. It's another level. So, for example, if you were to give me your bank account details, obviously it's a name and address, and it's tied to basically your whole identity, and that's where your money is stored. With decentralization, your money can be stored in thousands of wallets, if you will, that all contain $1 or $1 million each. I can spread it across many, many accounts, and basically, as long as I have those private keys and the access to it, no one can actually figure out who owns that, because I generate a random piece of code, if you will, from the blockchain, and that's mine. And then to access that piece of code, then I have to have my private keys and passwords, etc. So there's a whole nother level of privacy. Now, that's also good and bad, because if you're a shady character and I do send you the money and then you take off, well, I can trace that money back in some way or another. If you interact with a centralized exchange, I can ask them to block it. But you've seen many cases of people in crypto getting scammed because they send money to these wallets that no one actually knows, who owns them. And the whole project gets rug pulled, meaning the money, all the funds get liquidated, and it's impossible to find out who these people are. So that's the fundamental issue there of the next challenge of decentralized finance, is bringing privacy to the retail investor, trust and security as well, but also to eliminate, bad players. And bad players exist everywhere anyway.
Is there any chance it goes the reverse, though, where, let's say, the governments are coming in and starting to say, you know what, we don't like this being anonymous, and they start forcing, to have some kind of control? So I think probably one of the things that's really appealing is the fact that, like you mentioned, people have control. They don't have to deal with the governments and how they interact with money supply and their money policies. But is there a chance at some point that the governments come in and start enforcing regulations on these?
Oh, absolutely. I've always said things like decentralization, Bitcoin, Ethereum, blockchain itself, these things are the cure and the disease to the centralized financial system. So there's going to be a lot of freedom. A lot of people are going to make gains. They're going to do really well in their portfolios. They're going to experience transactions in whole new ways. Like, you imagine really controlling your money, right? But there's another level, which is if I start controlling my own money, or other people start controlling their own money, how is the government going to collect tax? You don't really know who owns these wallets. If I send you money, if you provide a service for me, you're supposed to claim that on tax, right? You're supposed to register that. That's the level of privacy that it gives you. So governments will eventually crack down. They'll also crack down because they're now trying to compete with their own stable coins. So their own versions of the US dollar, but it's a centralized dollar. I've read some of the reports and white papers on some of these centralized currencies, and they're not very good. It basically means the government can turn your money on and off if they don't like you. For example, there's a whole nother level of control there. What I think is going to happen, and you could say it's a prediction or just a feeling, is that at some point there is going to be too much money in the blockchain and not enough in centralized banking. So at what stage does the World Bank say, hey, there's actually 25% of the world's money now in blockchain that we don't control? They can't just print trillions and trillions and trillions into the economy to make up for that. That'll cause insane inflation. We'll have a Venezuela sort of type inflation in the West. So that's a scary day for decentralization. That either means that you want to have a lot in cryptocurrency to be able to combat that, or you just want to be prepared for what will happen. So I think that the governments know that this is coming. They're not sure what to do because it's so experimental. And again, blockchain devs and people working in crypto, we work so fast around the clock. Banks are open 9 to 5. The government works 9 to 5, you could say. Regulation is never going to keep up with this. So what will happen is they'll bring down a heavy fist and try and stop this with force rather than to try to work with decentralized finance.
One of the things that people have problems about the money supply, and like you mentioned, the government can just print it, right? They can print dollars and deal with the consequences of inflation or whatever comes about. How is crypto with it? I think if we take like the example, the most popular one, Bitcoin, is there a finite amount of Bitcoin out there? And then is it similar for other coins too? Can can they just be printed more, or are there finite amounts of them?
Yeah, great question. So with Bitcoin, there's this limited supply. It's not like you can just add more Bitcoins like you can to the US dollar. You can't just say, okay, now we're going to pump $1 trillion into the economy, and these are the results. So Bitcoin is finite, 21 million ever that have ever been created. Now, the more that you actually buy of Bitcoin, also I should say, the more money that's pumped into the Bitcoin network, that obviously increases volume, increases the amount of liquidity, increases everything. So it becomes more scarce, which is what drives the value up. Ethereum is doing something right now what's very interesting. The Ethereum is the second biggest, you could say, coin token behind Bitcoin. There are predictions that it may flip Bitcoin at some stage in terms of price. Most of the biggest brands and businesses in the world are building decentralized applications on Ethereum. That one itself is now, they've changed their mechanisms where basically it will start to become, from what I understand, a deflationary type style blockchain. So that means that now they're actually burning more Ethereum than Ethereum is being issued and being used, which is really, really interesting. There are tokens out there that have huge, enormous supplies. If you think about meme tokens, you probably would have heard of Dogecoin, and you would have heard of Shiba Inu. Shiba Inu has something, and I can't remember if it's like 100 trillion perhaps, but it's enormous. And some of them have, quadrillions and quadrillions. So when you buy, $100 worth at 0.0000 something, you get quite a lot for your money. But those coins itself, again, it depends on how they're structured, adding to the supply, burning tokens, things to look at are, who owns the token supply. So yeah, I mean, if you're looking into some of the safer bets, for the future, the finite ones are probably the better ones, which is Bitcoin at this stage as a source of long-term value.
The next steps, is it just becoming more accepted within the global marketplace in terms of, and I know you hear more and more of it being used to do this, or you can use it to this. Is that one of the next steps? And I guess the other thing I've heard too is one of the things it needs to get to that next step is the volatility aspect of it. It's you see how volatile it is, and if this is going to be some kind of currency, or I've even heard it be called like an equivalent of digital gold. But does the volatility have to get under control as well for it to move forward?
Yeah, great question, Mark. So I think with Bitcoin, it's like gold, right? That's how you should consider it, digital gold. I don't know if people want to spend their gold. So from all the people that I know that own Bitcoin, they don't want to spend it at Walmart. They don't want to actually go to their wallets and then move Bitcoin. They actually want to hold on to it, and they're holding on to it until institutions get in. That's their kind of, 401k, that's their superannuation, that's their ticket out of the system, because they own some Bitcoin. With Ethereum, it's hard to say. I'm a big fan of Ethereum. I use it all the time. It makes up almost my entire portfolio. I love to use it because you can build on it. You can do all sorts of things. Sending and accepting Ethereum-based tokens, yes. That's basically where this whole NFT craze is coming from, mostly from Ethereum anyway. So I would say that consider the forms of currency themselves to be more accepted when they're less volatile, when people really understand them. So for example, if you think about what's called an ICO, right? You have an IPO, initial public offering for a company. An ICO in crypto is initial coin offering. Same thing. You offer coins, which basically replicates what stocks would do at an IPO. Typically, these young companies are going out and trying to raise money based on a token that I'm going to give you in exchange for, USD, or I should say USDC to Ethereum or whatever. Now I'm going to issue this token. I'm going to give it to you, and I'm going to promise you that I'm going to build out this roadmap. The interesting thing about this is, if you consider that an NFT may be a form of currency. So if I buy an NFT and I stake behind it 1 Ethereum, and Ethereum becomes less volatile over time, and I can use that NFT to enter a nightclub, to buy groceries, to do something, then all of a sudden, it's not that the actual token itself needs to become less or more volatile for people to accept it. It's what the token represents. So if you think about loyalty systems, you have a frequent flyer mile card. They eventually will probably, in my opinion, be replaced with NFTs, because NFTs are unique. And now that form of currency gives me certain access to places. So I think that for them to be more accepted, yes, institutional money, it has to make sense. There are things like stable coins, though. So you would have heard of USDC and USDT, and these are tokens that basically reflect the price of the US dollar, and they're balanced basically on the supply with their cash reserves and how much is currently in circulation. So with that, I mean, I send USDC all the time, and that's an Ethereum-based token. So Ethereum can go up and down, but my USDC is relatively safe.
Are all these coins and tokens, are they somehow like, you can see, okay, the US dollar compared to the Japanese yen or the British pound, you can see what the equivalent is. All you hear about now is the coin or token compared to the US dollar. It's Bitcoin is this much, or is it ever going to get to the point where there's some kind of universal equivalence to each of them and how you can compare them? If you're using, Ethereum on your side and I'm using Bitcoin and maybe someone else is using another stable coin, how is it all going to be compared going forward?
I really don't know. I think my feeling is when I speak to people is that everyone sort of has their own preference. So I pay people who accept USDT, although that Tether coin or token really has some interesting background that people should also look into. But it really depends. I think it's a little bit like football or sports in general. I think it'll be actually very tribal. Blockchain gives brands the ability to make their own tokens and back with whatever assets they want. So if Google made a currency, it would be, it would shoot up, a million percent on the first day it launched. But Google would have to have some control over that sort of volatility by maybe replicating it with how their stock price floats, for example. What we'll see in the future, I don't actually think that we'll see less coins, so to speak. I mean, right now there are literally thousands and thousands. But I think that we'll see more branded coins. So city coins, and people, when you go to Miami, then this is the Miami coin, and it works on the Ethereum blockchain, and that's how you can spend. And so it'll be a difference in balance, but relatively everything I think still will be kind of floated on what the value is in US dollar. Until, unfortunately, if that completely crashes, then that's a whole nother story. I'm not sure.
So we've been talking a lot about Bitcoin, a lot about Ethereum. You mentioned the meme tokens earlier. Can you maybe give a little bit overview of what's different about a meme token and then some of the projects that you're working on at Hokk Finance?
Yeah, for sure. So meme tokens, if you are aware of what a meme is, it's this viral movement. It can be a funny picture of a politician. It can be anything that some clever little artist in their room creates on the internet. It goes viral, and that's a meme, right? And then people recognize that and they have a good laugh. That's basically viral branding. Meme tokens take the viral branding of something like for example, what Dogecoin is actually built on, right? It's this dog, it's this Japanese dog, and it was this funny meme that was made years ago of this awkward dog that went viral. People now refer to that dog as some awkward moment. So someone takes that brand and puts it on a token and says, "Hey, I've got a currency now. It's fun and exciting and it's creative. Use my currency to do different things." That's pretty much what a meme token is. Now, at Hokk Finance, they're actually one of the original meme tokens. I'm not sure if they were number 2, 3, or 4, but they were like pretty soon after Dogecoin that launched. And Hokk did I think it was like an $800 million market cap, like $100 million in volume in a single day for a meme token that just launched. That's incredible. But what that shows you is that people are so disconnected with central banking and US dollar or Australian dollar or anything that they would rather put their money in something fun and have a fun commerce or investment experience, you could say. So I reached out to Hokk some months ago because I bought tons of meme tokens and I did super, super well. And I was just so surprised at how well I did. And I kind of looked at it and I studied their brand, and I saw that they all had this community, this powerful social media group of fans and fanatics that just adored this brand for no other reason than it had a cool logo, right? Now, what I saw in that was all the biggest blockchain companies, all the biggest brands in the world spend hundreds of millions and billions of dollars on marketing and can't even get the same sort of fan base. Like, really, how is that even possible? So I looked into it, but then I also tracked and followed and saw that when Bitcoin takes a correction, or Ethereum, that these meme tokens get dumped on, and they get dumped on so hard because they have very little utility. You buy them, and then what do you do with them? You're actually buying them, like I said before, as your way out of the 9 to 5, right? It's your one shot out. So I pitched to the team and I said, "Hey, I have an idea. Why don't you build like ultimate meme utility? Build a financial ecosystem where you could purchase this token and you could send it and spend it any way you like. So if I wanted to buy pizza, if I wanted to buy coffee, if I wanted to buy NFT, if I wanted to stake it on a DeFi platform and earn USDC as yield, if I want to do whatever I want, if you build a financial ecosystem for your audience, you'll win this race. Because everyone right now, or most people in the meme token projects right now, are very much on hype marketing. They're waiting for a celebrity to endorse them, so the price shoots up 1,000%. They're doing massive billboards in New York Times. But what does that do for the person that purchased your token? Unless it really gets noticed and tons of money gets pumped into your coin, it doesn't really do that much. But if you give people that access to do it. So anyway, the team are on board, and I joined as their global brand and business manager. So basically right now they are a volunteer project, and I'm trying to turn them into a legitimate DeFi company, like a registered company with all the crypto licenses and everything. So day to day, I build systems and processes, and I'm helping the tech team with some of the product marketability and designing an ecosystem. So when you buy the token, then you can do something with it. And one of the products that we just launched is the NFT collection. And these NFTs are these cute, little dogs, these Inu dogs. There's 4,444 of them, a very easy number to remember. And you can buy these dogs. And these NFTs have utility-based contracts, which means that as the regulation changes over time, you can actually use that NFT just like you would as regulation allows you to, which is really exciting. Like I said, one day if the SEC says, sure, NFTs, they're securities, they can be used as stocks and bonds, well, then there's actually the technology to do that. So that's really exciting. So I think that we're going to be, and we are right now, a first mover in that space to explore such a wide range of ways people can actually use a meme token.
The equivalent of someone creating a meme token, is that similar to, let's say, someone creating a company and they build whatever, and at some point they IPO. So now they had 100% of the company, they IPO. There's different investors that come in, and there's a stock now, and the stock price is going to fluctuate. Is the meme token the same, similar? Someone creates the meme token, and now what they want is they want people to come in and purchase that meme token. Is it from them that they're purchasing?
Yeah, exactly. So there's a couple of ways to do it. So if you're a legitimate player, then what you do is that you would design what's called your tokenomics. And tokenomics in crypto is very similar to traditional banking, where you would have how your shares are divided among shareholders. So if you were going to invest into a company and you saw that half was owned by a big bad wolf, you probably wouldn't want to put your money in there because of the control. So it's very similar. So what happens is these let's say these blockchain devs, they make a token on Ethereum, and then they split up the tokens. And let's say the blockchain dev has 2% of the total supply, okay, of all tokens ever issued. And there's like one wallet in which those tokens will be distributed to. And then he or she lists those tokens on the, you could say, open market, and people find this token and they buy it. So they swap their Ethereum, for example, for this token, this Ethereum-based token. And then that liquidity pool, the amount of money inside that token gets bigger and bigger and bigger and bigger, just like how much money Google has in cash reserves, for example. So yeah, pretty much the same thing. And what meme tokens do, just like any very early stage crypto companies, is they develop a roadmap, and they promise all these things and say, hey, you give us some money and we're going to build this and we're going to build that, and we're going to spend money here, and we're going to hire all these people and do all these things. And you're basically placing a bet on the best and most attractive horse to win that race. And what happens is that if this token does achieve something and they do get picked up by a massive retail company, that token will explode in price, because all of a sudden what people realize is, wait a minute, why, for example, why is Bank of America invested in this token for? That's really interesting. What has that token developed? So that's kind of the volatility, why they explode 10,000% and then dump 5,000, that sort of thing.
Right. I guess when you create a meme token, your goals are really twofold. One, you want popularity, you want buzz around it, but also you need to create some kind of utility, some kind of use of it to kind of get that popularity. It's really the equivalent of creating you're basically creating like a company. It's not like you're really just saying, okay, I'm just going to create another currency and I'm just going to become all of a sudden this currency supplier. You're really creating a company that you need to generate interest, just like someone would have to generate interest to their stock price. And they do that by having a product or service.
Exactly. And think about this like Silicon Valley days, like these young companies, maybe with a little bit of tech raising hundreds of millions of dollars. Meme tokens and all these early stage crypto companies should be seen as just young startup companies. It's just that these meme tokens don't need to raise capital from venture capitalists or angels. They can raise it from, the greater blockchain community when there's millions and millions of them. So you can get $10 here, $20 there, $1,000 here, versus going and pitching to countless VCs, doing due diligence, which takes months and months and months and months. And then by the time maybe you took out, a couple million, but these projects can raise millions and millions of dollars on all, a global audience that believe in their project. The ownership itself is far more distributed. It's far more spread across so many more people. And that's what I was saying before. If you're a legitimate player in the industry, then you have a much smaller token supply for yourself and your team. But if you're an illegitimate player, and you would have seen some of these scam tokens getting around, it's because the developers maybe owned 50% of all supply. And then they realize, hey, millions of dollars just came into our whole supply. They'll swap their tokens back for how much money's in there. And they'll just like completely rug the whole project. And then people have lost everything. They can't get access to it anymore.
I just saw something either yesterday or today where Kim Kardashian and Floyd Mayweather, they were involved in, I guess it was a pump and dump with Emacs, I think the token was. Sounds like it was one of those, the ones that you're talking about, where it wound up being a scam on it. I know Coinbase is popular, where someone can go and very quickly open up a digital wallet and invest in some of these tokens. Are there other ways that people are investing or able to invest in these?
Yeah, for sure. So Coinbase is what you call a centralized exchange. So it's regulated. They've got front-facing staff. They abide by the law. Everyone knows who works at Coinbase, basically. The difference is between centralized system and a decentralized system, otherwise known as a DEX, DEX, is that a decentralized exchange is not really owned by anybody. It doesn't abide by the law. It's just code running in sync with other code. So, for example, if I wanted to interact with a decentralized exchange, it's very, very easy. You just have to get a Trust Wallet, a MetaMask, and again, these are the extensions that you put on your browser of, say, Chrome. You create an account, which is free. This is all totally free, and then it's from there where you need to understand where you get your Ethereum. So I think MetaMask allows you to get fiat to Ethereum. Like I think you can actually buy from your credit card. You can actually buy Ethereum and add it onto your wallet. But it's then, for example, however you get your Ethereum at the end of the day, or Binance or whatever other networks you're going to use. But it's that decentralized wallet that gives you access to a decentralized exchange where you can swap your tokens. So if I have one Ethereum, which at some point, recently was, let's say $4,000, if I want to use a portion of that Ethereum and actually swap it for a meme token or any other tokens, then I could do that. And I could do that, and really nobody else would actually know that I've done that, but I could exchange that. It doesn't run through the same process of buying stocks and bonds and ringing the bank and saying, hey, put me down for this much. It doesn't work like that. It's completely separate to any central controlling system. So people can interact with decentralized exchanges very, very easy if they, want to take that risk. Coinbase will do more due diligence, of course, on the tokens that they actually list, whereas anybody can make a token on a decentralized exchange. And you have to be very careful that if you do that and you swap it, that you are exposed to some level of risk if you don't do your own due diligence on who those people are or who that project is.
If you look at it from the investment side, and I know you mentioned like Bitcoin, digital gold, people probably holding on, hoping for it to blow up and, replace a 401k or, like you said, superannuation. Are they doing the same, or are you seeing more of like the equivalent of a day trader where they're swapping tokens in and out, trying to follow a trend or momentum or make short-term money?
Look, I see a lot of irresponsible people putting everything they have into meme tokens or any other projects that they actually have no idea who the people are behind the project. That's like very, very, very risky to do. So they are looking for that. It's because I think a lot of people feel like they've missed out on Bitcoin and Ethereum. And again, you don't have to buy one Bitcoin or one Ethereum. You can buy, $1 worth. You can buy, like a really small amount. But I think it's people's level of understanding that it's too big. So for example, if I was to buy one Bitcoin now at, 40, 50 grand, and it goes up to $1 million in, let's say, the next 10 years. Okay, that's a pretty good investment. I'll make 950 grand. That's awesome. However, with things like meme tokens, consider Shiba Inu. Now, I don't have the dates exact, but I recall seeing that if you invested $1,000 in this meme token, Shiba Inu, back in January last year or the year before or something like that, your $1,000 today is worth or recently was worth $750 million, which is completely insane on every level. And that's what people are looking for, and that's what they go for. The term's actually called to ape in, like a monkey flying in on a vine, to just rush into something and throw everything into a token, and that's when they lose. But they're doing this because they think they've missed out on Bitcoin and Ethereum. But these two have a long way to go.
Right.
So if you're still, it doesn't matter what age you are, in the next 5-10 years, there's going to be a lot of money to be made on both of those coins and tokens. So yeah, I think that's how I see it.
You mentioned Silicon Valley startups. Is it similar in the sense that Dogecoin or Shiba Inu hit, but there's 100 other ones that didn't make it or didn't hit?
Absolutely. I mean, for the ones that you hear about that do well, you also hear about the scammers, as we mentioned as well, but you don't hear about all the projects that failed. And I think if you look back for the last, I think it's 5 years, look at the top 100 coins of market cap. I mean, many of them don't even exist anymore. And these were really promising projects that raised a ton of money, had brilliant teams behind them, but they just couldn't hit it. It's not just to do with the market, but I actually think the big thing here in crypto right now is marketing. When you browse crypto jobs, okay, anyone that wants to work in crypto, in blockchain, the highest paid people right now, from what I see, are people in brands and marketing. And I think that is because what you find is you have a lot of Einsteins. There's a lot of Teslas in crypto, really, really smart people, but there aren't too many Gary V's. And Gary V, right, he did his own, what was it called? Doodles, the NFT project. And that did, extremely, extremely well. I think he did like $91 million in trades, literally within like a week. So the really insane thing about this is you don't know where it's going to go and what's going to happen. You basically have to think about this as that the top 10 tokens may exist now, but in 5 and 10 years, it may be completely different. So beware of how good a brand's technicals are. But if they're really bad at marketing, that brand, it'll be another Einstein or Tesla. Like Tesla pretty much died, unknown, right?
Yeah.
Like he wasn't what Elon Musk is to Tesla or to Tesla is to the world today.
Right. All right, so we're just about out of time. Mark, I want to thank you for being on the show. You provided some really great, valuable information on decentralized finance, digital assets. How best can someone find out more about you and Hokk Finance?
Sure. So if you want to go to hokk.finance in your browser, you'll find Hokk Finance and all the cool things that we're doing and all the social links there. If anyone wants to, join or add me on LinkedIn to chat more about blockchain and crypto, just search my name, Mark Basa, Basa, and that's the best way to find me.
Awesome. Thanks again. We'll link to all that in the show notes, and thank you everyone for joining us today.
Thanks, Mark. Take care.
Thank you for listening to the Agent of Wealth podcast. Click the subscribe button below to be notified when new episodes become available. The information covered represents the views and opinions of the guests and does not necessarily represent the views or opinions of Bautis Financial. The content has been made available for informational and educational purposes only and is not intended to be a substitute for professional financial planning and investment advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investments and financial planning.